Hello everyone, welcome to Student Fund Manager. I am Tuhin Sardar, and as always, it's great to see you here, especially after such a long time. In this video, we are going to discuss about our fund performance from 6th June to 8th July. And apart from that, I am going to share more on the decisions that we are going to take for the management of our fund from onwards. Let's get started. So at first, we are going to take a look at the highlights. Then we are going to see the comparison against benchmark. Then we are going to see our top three allocations and their returns. And then we are going to see the self-evaluation as manager. And then we are going to discuss what I have learned managing this fund. So the opening balance for our fund was 6,824 rupees. And during this time, we have invested 9,800 rupees more. And we have received a dividend of 31 rupees 55 paise from 6th June to 8th July. And during this time, we have also purchased 5 ITC stocks, 2 State Bank of India stocks, 1 Reliance stock, 1 TCS stock, and 1 HDFC Bank stock. And the closing value of our fund on 8th July was 16,210.60 paise. And during this time we have realized a negative return of 382 rupees, or roughly minus 2.38%. So when we compare against benchmark, we can see that our fund has beat the Nifty 50 benchmark by a large portion. We have faced a negative return of minus 2.38%, whereas Nifty has faced a negative return of minus 3.89%. And also in terms of volatility, we can see that our fund fared better than that of the index. Now moving to our top three allocated sectors. In first comes information technology with 29.49% of our weightage in portfolio. Next comes financials with 27.41%, and it is followed by energy 16.26%. Now the reason that I invested in energy is because during the summer there was a high chance that electricity would be consumed more, and even there were news that the price of power would go up significantly. So as a result, I had invested in this sector. And when we talk about stocks, the top three stocks in which we are invested are TCS, in which we have invested 20.15% of our total funds, followed by HDFC Bank with 17.24%, and Reliance Industries with 14.76%. And in terms of individual stock returns, State Bank of India or SBIN stock has given us the highest return, which is 6.89% during this period. It is followed by ITC with 6.64% and Bharti Airtel with 1.79%. And when we talk about worst performers, in first place comes ONGC with minus 21.08%, and Reliance Industries has provided us with minus 13.59% returns, and Hindalco has provided us negative 12.61% returns. So when we consider selling or holding stocks, I am going to sell Hindalco in the next trading day, which is tomorrow. Now when it comes to self-evaluation, in first metric, which is identifying investment opportunities, I have given myself a 2 out of 5. This is because in the previous evaluation, I had decided to invest in a few stocks in which we have invested, and these 3 stocks were from the top 3 returns. And in terms of stock research, I am going to give myself a 0 because I have not researched any stock thoroughly during this period. And when it comes to monitoring fund performance, again, I am a week late in making this video. So I am not exactly performing up to the mark. And when we talk about fund performance against benchmark, I'm going to give myself a 3 out of 5 because despite these things, I have managed to experience better returns compared to Nifty 50. And also during this period, I have learned several things. Some of them are perfectionism versus productivity. So before, what I was trying to do is calculate everything to exact, you know, percentage in the place of fourth decimal or something. But in reality, it is not very practical because you are not going to get those same exact returns, and these are more or less predictions from our part. So we can use these as measures and benchmarks, but we can't say for sure or calculate for sure exactly where the stock is going to go. And also, people around you play a big role in your development. Because as I work in our top fund house in the country, I am learning from the best and I am involved with the market. And every day I am talking to individuals and I am figuring out everyone's sentiments and what they think about the market. And it makes me much more confident and knowledgeable about where the market is heading. And we are going to use weekly returns instead of daily because, as you are aware, it is not possible for me to track daily returns as I'm working. And necessity of market updates. Because I have been out of touch with some of these stocks, I could not figure where this went wrong, and obviously I could not time my exit. As a result, I have faced losses in these stocks. So because of these things, we will be shifting our investment strategy. So before this, we were focused on particular equities, which is known as focused equity technique or scheme perhaps, in which I was investing more in only few of the stocks. But right now, what I'm going to do is I'm going to leave these to the fund managers, and I am going to keep around 6 to 7,000 rupees in this fund, and the rest I am going to withdraw and invest in different mutual funds. So by doing this, I will be not only diversifying my allocations, but I will also get more time to myself and for my research, and I would not have to micromanage 14 stocks on a daily basis. So that was all for our fund performance review from 6th June to 8th July. And right now I am technically working full time, so it takes up a lot of time and I am still getting used to this schedule. So this may require some time and there will definitely be some delays in our video uploads, but I am trying to create a framework through which you can contact me and through which these sessions are going to be more interactive with you. So that was it for this video and I will see you next time. Thank you so much for watching. See ya.